students. I'm Dr. Belav, Faculty School of Management, Shastra University. In this session, we are going to discuss about input tax credit. What is ITC? How it will adjust against the output tax payable? This is what we are going to discuss in this session. Okay. In GST, ITC is very, very important because we have to pay input tax at the time of inward supplies. When we pay or when we paid input tax, this amount will be credited in our electronic credit ledger. That's why it is called input tax credit. This amount is directly goes to your electronic credit ledger. This is your money, is in government hand. When you are going to further sale of the same inward supplies, now the government will allow you to adjust this input tax which you already paid against the output tax paid. So how can we adjust? What is the procedure for adjustment? Already we discussed in two places. One is in payment, other is accounting entries under GST. Like manner of utilization of ITC. So, this session we are going to adjust and know the provisions of ITC against output tax payable in detail. In detail, okay. Section 16, because already we discussed section 12, 13, 15. Is for time of supply of goods. Sections 12, 13, 15. 12 is for time of supply of goods. Is for time of supply of services. This is value of supply. So already we discussed all the three in the previous unit. Now we will discuss section 16, eligible and the conditions for taking ITC. Who are all eligible to claim ITC? All are not eligible to claim under ITC. I mean, all means those who are supply goods under composition levy, they are not eligible to claim ITC. So here you have to know who are all eligible persons. One is every registered person who has to register, when they have to register. What is the registration procedure? Everything we discussed in the previous unit, I think in second unit, registration. So every registered person, once you registered your person, you are eligible to credit your ITC in your electronic credit ledger. You see, electronic credit ledger, ECL. Because at the time, once you complete the registration process, 3 registers are automatically opened in your account. One is electronic cash register, or cash register or cash ledger, electronic credit ledger, then electronic liability register. All the 3 will be open. In your account. Anytime you may go and check how much ITC is credited in our account. Basically, you have to pay tax, that amount will be directly credited. So you have to update what are all the inward supplies you have, what are the outward supplies you have. So every month you have to register, you have to upload in the GST portal, you have to file all the returns clearly or possibly. You can easily know how much ITC is credited in your account. So here every registered person, that is very, very important. Eligibility for ITC. Possession of tax invoice. You said I have an inward supply, or you say I have an inward supply, I have outward supply. Immediately they will ask one question, where is the invoice? So here you should possess the invoice, because invoice is the authenticated proof of both inward supply, proof of both inward supply as well as outward supply. So without invoice we can't claim the ITC. Okay. Receive the goods or services by agent or transfer during the moment. Receive the goods or services. Receive the goods. When you receive, you have to place an order for purchase. Then only you are receiving, or you will receive the goods. Sometimes the goods transferred by your agent, this is also. Deemed to be received. Here you have to know bill to ship. Bill to ship to. Bill to ship to. What is bill to ship to? You see, you are the agent of the Amul ice cream. Amul Amul ice cream. One customer is placed an order for 1000 vanilla ice cream for his daughter's marriage. Take for example in Chennai. Your business place in KK Nagar. But the customer is in Tambram. But at the same time, you don't have 1000 number in your hand. You place an order to head office. Ask them to send 1000 vanilla. It is in Adayar. So the head office is accepted. Yes, we will send 1000. But you give one direction, sir, you need not send goods to me. You directly send to Tambram. This is ship to. Even though they sent goods to Tambram, they prepared invoice and sent to you only. This is bill to. Because you place an order. The customer will not place. The customer places order to you only. So this is bill to. They bill to you but ship to the direct customers. Here you are the recipient. You are the recipient. You are the recipient. Then by agent, A, B and B's branch were in A to B's branch directly, yet B is the recipient. By agent, A sent goods directly to B. So B is the recipient, B is the recipient. Then that charge should be actually paid. These are all the eligibility. You must have a invoice, receive the goods or services by the recipient. Tax charged should be actually paid. Suppose you have a due, you cannot eligible to claim. Once you pay the ITC, you pay the ITC first, then you will claim. Without paying, how can you claim ITC? When you pay, that time only this money is credited in your electronic credit ledger. Unless otherwise, no possibility. Because whatever the amount are credited in electronic ledger, that amount will be only eligible to adjust. The next one, furnish the return. You have to file the return promptly. Return should be furnished. Without filing return, you can't claim ITC. Without furnishing return, you can't claim ITC. So, you want claim ITC, all the points are very, very important, my dear student. It is the eligibility for claiming ITC. So, what says section 16? One is eligible person. The eligible person should be a registered person. அவன் ரெஜிஸ்டர் பண்ணியிருக்கணும். அவன் பிஸ்னஸை ரெஜிஸ்டர் பண்ணாத வரைக்கும் அவனால் ஐடிசி கிளைம் பண்ண முடியாது. எப்போ அவன் ரெஜிஸ்டர் பண்ணுறானோ that money will be credited in his electronic credit ledger. So they should be a registered person and the ITC will be credited in this electronic credit ledger. Eligibility, possession of tax invoice. Possession of tax invoice. Tax invoice will speak about our ITC. Because invoice is the authenticated proof. Because tax invoice is very, very important. We will discuss later only. What is tax invoice? What are the contents are included, mentioned, when, how it has to be prepared. Then receive the goods or services by the recipient, because recipient has to claim ITC. Recipient of goods, recipient of services. Recipient of goods, recipient of services. Tax charge should be actually paid. Tax should be paid. No, not yet paid. It's to pay. Furnishing the return. You have to furnish the return. Return should be furnished. Return should be furnished. Compulsory. Here all return. All return. Monthly return, quarterly return, half-yearly return. Everything without pay. Before the due date. Note. In case of receipt of supply in lot, ITC is available only on the receipt of last lot. You place an order for 100 TV. You are running a furniture mart in primary location in your city. You placed Sony company. Place an order to Sony company, ask them to supply 100 Flotron TV. But they said, sir, now we have only 10 TV. We'll send immediately. Then after 3 months, we'll send the remaining TVs to you. After 3 months. So when they will send the remaining 90 TVs, on that day only the ITC is credited in your account. So when the lot is complete, I mean when you are going to receive as a last lot, at that time only you have to claim. If recipient failed to pay the supplier within 180 days, he has to pay an amount to the extent. Once you buy the goods, the ITC should be, the input tax should be paid within 180 days from the date of supply or date of receipt. 6 months they give time. Within 180 days, unless otherwise you have to pay the penalty and all interest. ITC availed with interest can be availed again the payment to the supplier. Depreciation is not available on ITC, availed on capital goods. Depreciation, depreciable assets. When you buy depreciable assets, So ITC is not eligible to claim for depreciable assets. You buy furniture, machinery, so in this case ITC is not available. No ITC related to any financial year after the due date, whichever is earlier, furnishing the return for the month of September for following the end of the financial year or furnishing of the relevant annual return. No, it is related to financial after the due date. You have to file the return. You have to pay the tax whichever is earlier of the following. At least you have to pay ITC for the month of September following the end of financial year. Suppose you are in January, you buy goods in January, but you have to pay this amount before the September of this year. September of this year. Okay. So, or furnishing of relevant annual return. The date of furnishing annual return is 31st December. Whichever is earlier. So, probably September, the month of September will be the last date or due date for ITC. So, you have to pay the money within 180 days, 6 months they give. Okay. They are very, very important. The notes are very, very important. In case of receipt of supplies, lot in lot, when you receive last lot, at that time you claim. When you fail to pay amount within 180 days, ITC should claim along with interest and all, but you have to pay. Then no depreciation is for and depreciable asset and depreciation is not available on ITC. Example. Hercules Machinery delivered a machine to XYZ in the month of January. Under invoice number 49 dated 28th January, 4,15,000 plus GST, and underlooked trial runs and calibration of the machine as per the requirements of XYZ. The amount chargeable for the post-delivery activities was covered in a debit note raised in the month of April, 50,000 plus GST, no problem. XYZ did not file its annual return till the month of October. What is the cut-off due date for? The cut-off date is nothing but 28th when they sent 28th January. So 180 days from the 28th January, 20th October being whichever is here, the due date of return for September, month of September, or the date of filing annual return. So the file of annual return is month of October. Due date for return for September month or date of filing, whichever is earlier. Whichever is earlier. The date of filing the return is October. So whichever is earlier is 20th October. Okay. The cut-off date of ITC availability is whichever is earlier of the two. Due date of return for September. For September, 30th September. 30th September. And the month of October, 30th October. Okay. But 180 days should be given. January, February, March, April, May, June, July, August, September, October. The month of October till the end the month of October. So I think 30th October is the due date. 30th. This answer. Documentary requirement and conditions for claiming ITC under section 36. Document requirements and conditions for claiming ITC under section 36. What are the documents are required to claim ITC? Because at the time of claiming ITC, you have to submit the following documents. ITC available for registered person and IST, input service distributor, on the basis of any of the following documents. Based on the following documents, they permit you to avail ITC. So the following 5 documents are very, very important. Tax invoice, or if any revised invoice issued by the supplier, both will be taken. Tax invoice or revised invoice issued by supplier. B. Tax invoice under reverse charge subject to tax payment. Tax invoice and reverse charge subject to tax payment. Subject to tax payment. Sometimes debit note, anything issued, so debit note issued by supplier. Bill of entry or other document prescribed under Customs Act. Bill of entry or other documents prescribed under Customs Act. Invoice or credit note issued by input service distributor. So all the 5 documents are very, very important, my dear students. You have to check whether they have all the documents or not. So when they have all the documents, they are obviously eligible to claim ITC. Obviously they are eligible to claim ITC. So one is tax invoice or revised invoice issued by the supplier. Number 2 is tax invoice under reverse charge subject to tax payment. Debit note issued by supplier. Bill of entry or other documents prescribed under Customs Act. Invoice or credit note issued by IST. So all the 5 documents are very, 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 very important. And others are tax invoice should contain the requisite particulars, at least the particulars listed below. When you show this is the tax invoice, it should be some relevant information. It must have a relevant information. Date, your registration number, quantity, size of the quantity, number of quantity, rate, how much discount they have given, everything. How much they charge, as a tax, so amount of tax charged. So you see, amount of tax charge, description of the goods or service. What you buy from them, what services you avail from them, what goods you bought from supplier. what benefit you avail from? Total value of supply. What is the total value? How can we say? The last class we calculate value of supply. So what is the total value? GST, IN, goods and service tax, number of the supplier and the recipient, place of supply in case interstate supply, from where you bought, from other state or from local supplier. So all the informations are required to claim ITC. You see, amount of tax charged, description of goods or services, total value of supply, GST and number of the supplier and the recipient, sorry, place of supply in case of interstate supply. Everything. Third one, no ITC if tax is paid after demand on account of fraud, material misstatement and the suppression of facts. You paid ITC for wrong, fake information, fake document, fraud material, suppression of fact. You reduce the truth, reliable fact. So in this situation, you are not eligible to claim ITC. Here they expect perfection, honesty, loyalty. Then ITC, restrictive ITC based on invoice, debit note, upload as per goods and service tax return one by the supplier. See, you have to file the return, they also will file the return, they upload, or all the persons are buying goods from me, you have to upload, or all the persons are supplied goods to you. Suppose you fail to upload, they upload your name, so based on that you will be punished. So A, uploaded, avail 100% ITC on the invoice, upload by supplier. Once you complete the uploading process, you can collect 100% ITC. ITC is a benefit for you. It's a profit. Suppose you have not uploaded 100%. Once you upload 100%, avail 100% benefit. Suppose you applied, you have not uploaded. Once you complete the uploaded process, avail 100%. Not uploaded, but you are the buyer. There is no second thought because they have uploaded your name in their sellers list. Their buyer list. Their buyer list. So automatically you will come. You are one of the list holder. So when it is not uploaded, avail 10% ITC on the invoice uploaded by the supplier. So here you are going to lose 90% of ITC. What is the effect, sir? Once you not avail ITC, you have to pay more output tax to the government. That's all. You are eligible but not claimed. This is your mistake. You have to aware, you must be a faithful person, loyal person, sincere person, so that you are eligible. It is possible. Okay. Note. Restricted amount of ITC claimed on invoice debit note not uploaded by supplier GSTR 1A should not exceed the actual eligible ITC available respect of the invoice is not uploaded. Invoice on which ITC is not available or not be considered be calculated 100%. In this situation, you upload, but no, you have not uploaded invoice. Here, even 10% is not, also is not eligible. So, invoice is very, very important. Full ITC can be availed in respect of IGST paid on import documents issued under reverse charge, credit received from ISD which are outside the ambit. Restricted ITC, 10% is calculated on a consolidated basis and total eligible ITC from all suppliers against the supplies whose detail have been uploaded by the suppliers. 10% is also, they will take the total of all suppliers, then only they allow 10%. So what you have to do? You have to upload your details of business without fail before the due date. You have to file, you have to upload. You should maintain proper invoice, tax invoice. That is very, very important. Solve problem. Vijay Sales, a registered supplier, receives 100 invoices for the inward supply of goods or services involving GST of 10 lakh from various suppliers during the month of October. Out of 100 invoices, 80 invoices involving GST of rupees 6 lakh have been uploaded by the supplier in the respective GSTR 1, filed on the prescribed due date. Therefore, compute ITC that can be claimed by Vijay Sales on its GSTR 3B for the month of October to be filed on 20th November. That GST is 10 lakh is otherwise eligible for it. See here, what he has done, he has uploaded 80% of the invoices, but he supplies 100, sorry, receives 100 invoices. He bought 100 invoices worth product. So now the ITC he paid is 10 lakh from various suppliers. But he uploaded 80%. For this 80%, ITC is 6 lakh, so he availed this one. So 6 lakh plus 10% of the uploaded value. 10% uploaded value is good because remaining 20% is there, not uploaded. So 6,60,000 is available. 100% 6 lakh, then 10% for not uploaded. Not uploaded. Okay, this is what claim of ITC. Suppose he upload 100%, he can claim 10 lakh as an ITC. Hope you could understand. Good. Ajay sells a registered supplier, receives 100 invoices for inward supply of goods and services 10 lakh. 85 invoices 9.5 lakh. GSTR filed in prescribed. Okay. Compute ITC to be claimed. Vijay is the month of October to file 20th November. So before the due date. Now he is eligible to claim 10 lakh. For 100% 10 lakh. Sorry. He has uploaded only 85%. So 9,50,000. Then 10% of remaining. GST are not uploaded. So 0.5. So 10 lakh. So ITC 10 lakh is available. 100% ITC for uploaded 9.5 lakh plus whichever is less of 10% ITC for invoice uploaded 9.5 lakh or 100% ITC for invoices not uploaded. Not uploaded means 100% ITC for invoice not uploaded. Total ITC 10 lakh, 9.5 lakh already claimed, so 0.5 whichever is lower is 10%. Sorry, 0.5. So 0.5 plus 9.5, 10 lakh is eligible. So he is eligible to claim all because the rule says this type of. Okay. Reversal of ITC in the case of non-payment consideration under section 37. Reversal of ITC under section 37. Pay ITC availed in case of non-payment of consideration only days except schedule 1. Suppose you have not paid ITC, input tax within 180 days, you are not eligible. ITC can be reversed. ITC refundable is added to the output tax. How much they refunded should be added to the output tax you have to pay. Interest is payable. How you refund? Refund means return a reverse. For the reverse value you have to pay. No time limit for re-availing the ITC reversed earlier. No. They reverse, then you have to correct all those things and now you are eligible to claim ITC. Now when? There is no time limit. You have to wait. So these are all the problems that arise. That's why you have to maintain all the relevant documents carefully. You see here, they are very, 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 very important. You have to maintain and submit and upload all the relevant documents without fail. So automatically you can eligible to claim ITC. Eligible to claim ITC. These are the reversal of ITC in the case of non-payment consideration. Schedule section 17, apportionment of credit and blocked credit. That is very important. What is apportionment of credit? What is blocked credit? When you have a blocked credit, you cannot eligible to claim ITC. So no ITC for blocked credit. Because they are not treated as a normal supplies made by the supplier. Partial ITC is availed if input is used partially for the business purpose. So, what is very important, once you buy a product or things or a material or goods for business purpose only, now you are eligible to claim ITC. Suppose you buy a product for your own use, not for resale. This is not eligible. Not eligible. Partial ITC is availed if input is used partly for taxable supply or zero rated supply. No problem. Business purpose is eligible. Partly taxable and zero rated eligible. Exempt supply includes supply under reverse charge. Exempt supply is also eligible. Reverse charge and transaction is securities and sale of the building. But exempt supply, no problem at all. Exempt supply means you are not paying any ITC for exempted. Banking company or financial institutions or non-banking financial companies has option in the section banking company or financial institution and non-banking financial corporation has option under section 38 engaged in supplying services of accepting deposit, extending loans and advances. When they are engaging this type of activities, they are eligible. How? Avail partial ITC to the extent of taxable supply or avail 50% provided. The option once exceeds shall not be withdrawn during the rest of the period. 50%. Provided restriction of 50% will not apply to the tax paid or supplies made to distinct person. That is very important. So, when are you doing banking business, 50% you can claim as ITC. So section 14 is very important. Partial ITC available for business purpose, taxable supply. Here you have to include zero rated also. So because no ITC was zero rated, but to claim proportion, the zero rate supply is also included. Exempt supply includes supply under reverse charge and the restrictions in security sales and the land and building only. When are you doing banking company or financial institutions or non-banking financial companies, but your main business should be accepting and extending loan and advances, here you can claim 50%. You can claim 50%. Okay. Blocked credit. What is blocked credit? Because no ITC for blocked credit. So what are all the items for blocked credit? Blocked credit means the amount will not credit in your electronic credit ledger. This is blocked credit. They block credit of ITC in your credit ledger. Block. Motor vehicle for transportation of persons, maximum 30 seaters including driver. You are running an institution or industry. In your industry, the administrative office is one place and site is another place. For commuting between these two, you operate a van. The sitting capacity of the van is more than 13 seats. Now you are not eligible to claim, including driver. Suppose you buy a car below 13 seater, including driver. So how much you pay tax for that car at the time of purchase will be adjusted, but it should be used for your business purpose. So based on the motor car, that is size of the car, seating capacity, except further supply of such vehicle or conveyance or transportation of passengers or importing training on driving, flying, navigating such vehicles or conveyance. This is not eligible because they are doing for other type of business. You have a cab and you are giving training for all. No, ITC is not claimed. So you can claim ITC because it is coming under business. Vessels and aircraft. When you buy vessels and aircraft, ITC is not allowed. So motor vehicle for transportation of person, maximum 13 seater including driver, not allowed. Maximum, more than that is allowed. You can, because you may use for business purpose. Further, except further supply of such vehicle or conveyance of transportation passenger, import training, okay, even aircraft also, and transportation of goods. When you are using drugs for transportation of goods, you can avail ITC. Avail ITC. Okay. Except. So, blocked credit is very important. What are the items or what type of purchase ITC is not eligible? Services of general insurance, serving, repairing and maintenance of motor vehicle, no ITC. For insurance service, repair, maintenance of motor vehicle, vessels, no, ITC is not allowed. Except motor vehicles, vessels or aircraft are used for the specific purpose, where such services are received by taxed person engaged in the manufacturing of such motor vehicle, vessels or aircraft, the supply of general insurance, okay, now it is allowed. So when they are doing all those things in business nature, no problem. Other supplies, what are all not eligible. I mean, coming under blocked credit. Food and beverages is a blocked credit. Outdoor catering, beauty treatment, health services, cosmetics and plastic surgery, food and beverages. Whenever you are doing outdoor catering, beauty treatment, health service, cosmetic and plastic surgery, they do some operation in face for beautification. ITC is not allowed. Leasing or hiring of motor vehicle, vessels, aircraft, life insurance, health insurance, not allowed. Except where the recipient of the above service used for rendering similar outward taxable service, allowed. Outward taxable service is allowed. Membership of a club, health and fitness center, ITC is not allowed. Travel benefit extended on vacation or LTC, ITC is not allowed. Travel, they provide some LTC, ask them to go a tour and enjoy the benefits. Not allowed, but except where the above service are obligatory under any law for providing employees by employer. This is business purpose. Because once you allow them to enjoy, when you come back, the productivity is increased. So here you assume that this is meant for business purpose. So these are all the points you have to keep in your mind at the time of find out blocked credit. And works contract services when supplied for construction of an immovable property other than plant and machinery. Works contract, no. Plant and machinery means apparatus, equipment and machinery fixed to earth by foundation or structural support that are used for making outward supply, including such foundation. So now it is taxable. For works contract services, you provide employees for work contract services. Immovable property, supplied for construction, immovable property. Exclude land, building or any other civil structures, telecommunication tower, pipeline. So exclude. They are coming immovable property. So here ITC is not allowed. Except where it is an input service for further supply of work contract, movable, plant and machinery. So once use now and also you are going to use some other contract, how is eligible to claim both? Goods or services are both received by taxable person construction of movable property. Then composition tax. When are you paying composition tax? Now you are not eligible to claim ITC. Already told you. Goods or services were both by NRTP except goods and except on goods imported by him. Goods and services are both received by NRTP, non-resident taxable person. They need not. Goods or services are both for personal consumption. You buy a goods or service or both for your own consumption, personal consumption. No ITC. But when you buy goods or service for business, you can claim ITC. So personal consumption, no ITC. Goods lost, stolen, destroyed, written off or disposal by way of gift or sample, no ITC. ITC reversal when return of time, expired, medicines, no. ITC in case of sale promotion scheme, sample and gift free and free gift, buy one get one free, discounted including buy more, secondary discount, no. Whenever they allow, so ITC is not allowed, because purposefully they are doing for the business. Then government prescribed the proper of manner of apportionment. Government prescribed the manner of apportionment. They tell this is the formula for calculating. So on that time also. Explanation. Aggregate value of exempted supply shall exclude interest and discount free transportation of goods, the vessel. Capital goods include plant and machinery. For determines the value of exempted supply, refer to the total value of land and building. SDV. And the value of security, 1% of the Rule 38. Claim of credit by banking company or finance institution. Activities in case accept deposit 50%. Already we discussed. So this is what the blocked credit. So in ITC, blocked credits are very important. So you have to understand what are all the credits are not eligible to claim. So I will stop this session with this. The remaining part of the ITC will be discussed in the next session. Okay. Thank you. Thank you very much. Thank you.